Hello traders, Gary Wagner here, 11:35 in Honolulu, 5:35 in New York on Wednesday, 31st day of October 2023, and this is the Daily Report for Gold and Silver. Traders, we do have gold trading off today by about $11. What is important is the percentage decline, 0.56%. We'll get to that in a second. Gold futures opened above $2,005, traded to a high today of $2,017, a low of $1,987.40, and is currently fixed at $1,994.30. And traders, the reason that I wanted to hone in on the percentage decline in gold rather than the dollar amount is in relation to dollar strength today. We've got a daily candlestick chart of the dollar index. The dollar index gained 0.53%. Gold lost 0.56%. So there is an extremely fractional amount of selling that went in, but in essence, a push. The dollar was almost totally responsible for today's decline in gold. And traders, dollar strength today is very much tied to yields in U.S. government instruments, such as the 30-year bond, which is tied to the monetary policy of the Federal Reserve. We're looking at a daily chart of the 30-year U.S. government bonds. You can see that in trading today, yields rose almost a full percentage, 0.91%, with the yield on 30-year bonds currently over 5% at 5.097%, which is why you're looking at 8% mortgages. That's the difference between Fed funds rates and a couple of points that banks will charge to loan you that money for 30 years. When you have rising yields, that strengthens the dollar, especially considering that foreign investors are looking at different central banks to get the highest possible yield. If they're looking at U.S. government bonds as the place to put their capital in, of course, they have to purchase those bonds in U.S. dollars, and that's supportive of the dollar. The dollar, of course, is paired against gold. Higher dollar, lower gold. Silver traders witnessed a strong decline today. We're looking at this large red candle representing a decline of almost 2%, 1.90%, or 44.5 cents, taking the most active December contract still below $23 at $22.95. I am still cautiously bearish on silver. Lastly, I want to talk about our active trade that we currently have on. Over the last 3 weekends, we have seen gold trade to a high on Friday, only to soften up on Sunday in Australia, carried over into New York Monday morning, and then pick up. I had assumed that we might see the same thing. So what we did is we did enter pre-New York Open when the market was trading at approximately $2,005. As I sent out the trade alert, it went into a fast market scenario in which I saw it rise from 205 all the way up to 2009, and about 2 or 3 minutes later come back down to about 2005. We're marking ourselves in at 2006, but traders, you could have gotten in a dollar or so higher or lower than that price point. We did put our stop at $1,985. The lowest we've seen gold trade to was today at 87 and change. Our hope is that tomorrow's statement, press conference, and conclusion of the FOMC meeting will first not contain any kind of a rate hike, which is what is assumed and almost a certainty, and the statements and press conference by Chairman Powell are construed as modestly dovish to be supportive of gold. For now, maintain your current long position as well as your stop. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.